budgeting tips today. And so if you'd like to build your own budget while you're going through this, feel free to make a copy of the template that's in the folder and work through it as we go. But without further ado, I will get us started here. I'm going to share my screen. This is what the resource folder looks like. So you can find the budget template right here. Just make sure you make your own copy, and that way you're not writing all on the same one. And let's get started here. So thanks so much for joining us, everyone. My name is Natalie Armstead, and I'm a basic needs coordinator who works at UC Santa Barbara. I work in the Office of Financial Aid and Scholarships. So my primary role is helping students figure out how they're going to pay for college and go to school without breaking their bank. And so I do a lot of budgeting and financial advising for students who are going to school here. And so it sounds like all of you guys, or the majority of you, are rising seniors or students in high school. And presumably, if you're at this workshop here, you're probably considering going to school at some point for in the future. So there's a few things you probably want to know and a few skills I'd love to share with you guys around budgeting and finances, especially related to going to school. So some of the outcomes, some of the things I want to cover today are the basics on how students pay for school and go to school. Some of our healthy financial habits that I like to share with students, especially in their first year. Some of the basics around debt and repayment so that you guys understand what you're getting into, understanding credit scores, and then I want to do an introduction to how to build a budget, which is a really important skill to have if you're going to school and beyond school as well. So to start us off, looking at the basics on how students pay for school. Now, school can be really expensive. It costs, $30,000 to $40,000 a year to go to school. And a lot of folks don't have that saved up or haven't had the ability to save up to go to school. So a lot of students use financial aid to help pay for school. And there's two different tracks, two different routes that students can apply for financial aid in order to help pay for their tuition. The first is the free application for federal student aid. This is the federal application for student aid that students use if they are a US citizen or part of a very select few visas as well can apply through the FAFSA. And so this is an application where a student fills this out and it will automatically apply for all the federal and state and school financial aid that's need-based. So when you fill out the FAFSA application, you'll input your financial information, your tax information, your income information. And the idea behind the FAFSA is that it wants to calculate a family's financial strength to figure out what's fair to ask a student to pay for school. And so students who come from higher income families will get offered things like student loans to help pay for school, and students from lower income families might get subsidized with additional grants and scholarships along with their student loans to help pay for school. So the FAFSA is for students who are citizens or part of eligible non-citizens, and usually folks who have a social security number. Now, for any folks who are in California, there's also the California DREAM Act application, which is basically the FAFSA for folks who aren't eligible for the FAFSA. So anyone who's AB 540 or AB 2000, these are folks who aren't eligible for federal student aid, but can still apply for state student aid to help pay for going to school in California. The DREAM application is almost identical to the FAFSA in terms of the questions that it asks, almost word for word identical. And it does the exact same thing where it helps determine a family's financial strength in order to see what schools should or are able to offer them in terms of financial aid to help pay for school. Now, big thing to keep in mind is that students generally fill out either one of these applications when they're applying for schools. So when you're filling out your applications, maybe you're applying to 4 or 5 different schools, you'll fill out one FAFSA or one California DREAM application. And during that application, it'll ask you to list all the schools that you're applying to. So you'll put in all the schools that you're applying to, and then those schools will get a copy of your FAFSA when it's filled out. And a big thing to note is that the deadline for both the FAFSA and the California DREAM application each year is March 3rd. So it's filled out a lot earlier than some students realize. So when you're applying to schools, remember you also need to apply to financial aid. The March 3rd deadline was pushed back to May 2nd this year because there was delays with rolling out the new and revamped FAFSA for this year. But in every year going forward and every year in the past, the deadline is March 3rd. So mark something on your calendar. Most students fill out the FAFSA or DREAM application each year in either January or February is most common. And the other thing to remember is that the FAFSA or DREAM application is an application for the year that you're going to school. So if you fill out that application, it's good for 1 year. And then every subsequent year, you need to fill out a new application. And so students who are applying for a FAFSA for federal aid will get funding from a few different sources. So they'll get funding from the university, they can get offered funding from the federal government, from the state government, and then you can also apply for any sort of private scholarships, anything that's merit-based, based on your academics or sports or where you're from. Those will all get combined together into what we call a financial aid package. And so this is a sample financial aid package. This one's from a couple years in the past, but it's pretty similar. It looks similar every year. So you can see this student got offered a Cal Grant, which came from the state, federal Pell Grant, which comes from the federal government, UCSB scholarship, which came from our school, the health insurance grant also comes from our school. So they get offered a few different grants and scholarships, but then they also get offered other things as part of their financial aid package. So this student's got work study eligibility here, which is a work program where students can work on campus to earn additional financial aid. And this package also has different types of student loans as well, federal student loans. So we've got subsidized student loans and unsubsidized student loans. The amount of financial aid is going to be based off of the school that you go to, and your grants eligibility is going to be based off of your income and your household income. But the big thing to remember here is that $34,000 number in the bottom corner. Keep that one in your mind for a second here. So students who fill out the California DREAM application are going to have a similar type of application. They'll fill it out. It's got all the exact same questions. The only difference basically is that DREAM scholars aren't eligible for federal financial aid. So they can't get money from the federal government to go to school, but they will get money from the university to help pay for school, the state of California, and of course they can apply for any private scholarships as well. And so this is what a California DREAM Act application financial aid package will look like. And you'll see that they've got Cal Grant from the state and UCSB scholarship and health insurance grant from the school, as well as a UCSB work study program and a California DREAM loan, as opposed to those federal subsidized and unsubsidized student loans. And while the financial aid package is going to come from different sources, whether you're a DREAM applicant or you're applying through the FAFSA, the big thing to note is that you're going to get the same amount of financial aid no matter what. That $34,000 number in the corner is exactly the same whether you're a DREAM student or not. And so you guys will notice that student loans were part of both of those financial aid packages. And in fact, every student who applies for financial aid will be offered student loans of some sort, so long as they're eligible. For students who are coming in and their income doesn't meet all of their expenses to pay for school, maybe you don't have savings saved up to go to school, it's very common for students to end up taking out some student loans while they're going to school, and that's totally normal. Student loans are sometimes a scary thing. I think folks are a little bit afraid because there's a lot of big numbers, and there's student loans tend to take years to pay off after you graduate, and some people don't quite understand how the student loan programs work. So, but it is pretty normal for students to use student loans to help pay for school. The other thing that students sometimes will do is they will either decide to take out student loans, or they'll decide to work on campus. And this is pretty common for students. If you're coming in and you don't have savings to pay for school, most of the time students are going to need to either use student loans or work on campus to make up the difference in funding. Now, some students will choose to work on campus because they don't want to take out student loans, and there's benefits to that. Obviously, you don't end up graduating with as much debt, but you also have less time to focus on school if you're working. And student loans, if you take them out, you'll end up having to owe those back eventually, but to have more time to focus on school. So some students will do a combination of both. They'll work and take out some student loans, making sure that they're not working full time. Some students will take one, some students will do the other. It's really up to you and what's going to be best for your financial situation. So there's a few different types of debt, and we'll talk about debt on a few different areas, different types. But the two main types of loans are installment loans, which are things like student loans, where you get offered a set amount of money and it goes to a specific purpose. So when you're offered student loans, either California DREAM loan or federal student loan, that's going to be used to pay for school and your tuition, your student fees, and then of course things like housing and food while you're going to school. Sometimes this is called the good kind of debt. Generally, installment loans are easier to manage and they're less likely to get out of hand. So they're a little bit safer. And things like student loans are a lot more forgiving. They usually have lower interest rates and are intended to be paid back over a longer period of time. The other type of credit is revolving credit. And this is something like a credit card or retail store account where you take out a line of credit and you can keep using it even after you pay it off, or even if you don't pay it off. So you'll be able to use your credit card even if you haven't paid it off for that month. Now, this is sometimes seen as kind of bad kind of credit or the bad type of debt. And credit cards can certainly be useful. I think there's a little bit more of a risk of if you're not managing your budget and you're not on top of things, it can get out of hand and you can snowball a little bit in how much you owe. So both of these different types of loans can be useful, but you need to be on top of managing your debt and making sure that you're not taking out any more than you actually need. And so whatever type of loan that you take out is going to come with an interest rate. Now, interest rates are basically the cut that whatever your loan lender, they lend you the loan and you have that money immediately, which is the benefit. But in the long run, you have to pay back more than you borrowed. And that's the interest. So usually it's done as a percentage. Student loans generally have an interest rate of about 5%, whereas credit cards will be up from about 10 to 15%. And so it's really important to understand what an interest rate means when you're taking out a type of credit and understanding how that's going to affect it in planning how you're going to pay back that money eventually. Different types of credit have different types of credit rates. So make sure you're definitely reading the fine print on whatever you sign. If you're signing up for a credit card, make sure you're fully understanding what that interest rate is going to mean and how it relates to other types of credit. Here's an example that we sometimes use. Smaller numbers can make it a little bit easier to understand. So imagine you're using a credit card to pay for a coffee that's $4. If your credit card has an interest rate of 14.5%, and you take 10 years to pay off that coffee and pay that back, maybe because you're paying back other things first, what you'll end up actually paying for that coffee is, $7.59, almost double of what you're actually paid for the coffee in the first place. And so the rest of that interest goes back to your loan lender, to the bank or whoever loaned you that credit card. So there are some advantages and disadvantages to using credit cards. The advantages to using credit cards is that it does build up your credit history. If you have a credit card or two, you can use them and that will help build up your credit score over time, but only so long as you're actually paying those off on time. If not, it will actually damage your credit score. So you got to be sure to manage those. Credit cards are also good to have in emergencies. Most adults have a credit card or two. They can also be used for bigger purchases as well, for things that you don't have immediate funding for. Maybe you don't have something in your debit account, but you can use a credit card to pay for a bigger expense or an emergency expense. And some credit cards do come with like cashback programs or mileage rewards, which you can save up and use those for paying for things in the future. Disadvantages to using credit cards to pay for stuff are things like hidden fees, things you might not be aware of if you didn't read that contract when you were first signing up for the credit card. It's also easy to snowball with debt if you don't pay off your credit card in time. Basically, if you're using your credit card, you should be able to pay it off every month. And if you're getting to the point where you can't pay off that credit card every single month and get that balance down to zero, that should be a big red flag. And you should really consider either canceling that credit card or looking for different sources of income, different ways to pay for things. With credit cards, it can also take years to repay debt, since if you're constantly using that credit card, then it will keep accumulating interest, and that interest goes up exponentially every month. Credit cards also tend to have higher interest rates than bank loans or federal student loans. And of course, if you are missing the monthly payments or you're late on monthly payments, it will hurt your credit score, which can hurt your ability to make big purchases in the future. So looking at a couple of different scenarios here, let's say I was chatting with my husband the other day, and he wanted us to buy an industrial ice cream maker for our apartment. He thought that would go great in our kitchen. And so that's approximately $2,500 that we would be putting down. And if we pay that back $100 a month with an interest rate of 19.9%, it would take us about 2 years and 9 months to pay off that full balance. Now, the way that interest rate accumulate is that it accumulates exponentially. So in scenario 2, if we buy that ice cream maker and we pay it off at $50 a month, it's actually going to take us 9 years and 1 month, almost over 3 times as long to pay that back, and with the same interest rate. And so that's a lot more money that we're spending in the long run. So always keep in mind when you're using a credit card, the longer it takes to pay off your debt, the longer you're accruing interest as well, and the more interest you accrue every month because of how much you owe. And interest compounds on interest in most cases. So if you've got extra interest in there, that interest is also gaining interest on it. So be careful when you're using credit cards, especially to pay for things. I see probably every year a handful of students will come to me and they'll say, Natalie, I've maxed out my credit cards. I don't know how to pay for food and groceries this month. I've got $10,000 in debt on credit cards. And we look at their budget and their balance, and I see that the student is putting all of their tuition on the credit card with an interest rate of 19%. And they haven't touched their student loan eligibility, which has an interest rate of 5%. And in some cases, doesn't even have to be paid off until after you've graduated from school. And so if you're not using the right type or the best resource to help pay for school, you can end up paying more in the long run, or running into situations where you don't have any more credit to take out to use your credit card anymore. And I mentioned credit scores a couple different times. What is a credit score? A credit score is basically a numerical measurement that loan lenders use to predict how well you'll be able to repay a loan. So banks will look at a credit score if you're wanting to take out, a mortgage, or you want to take out a car loan, or you want to start a business or something in the future. They're going to look at that score and say, okay, was this person in the past, have they been able to pay back their debt? Have they been, good with loans that were lended to them? Did they use their credit cards appropriately? Or did they, accumulate lots of debt, file for bankruptcy? Did they miss a lot of payments? And they're going to use that to determine whether or not they will allow you to take out a loan from that institution. So having a good credit score is really important. And you can boost your credit score by showing that you've got responsible credit history. The longer you have a credit card and you're able to make payments on it on time, the better your credit score will get. The more payments that you miss, the worse it's going to get over time. So here's some of my credit tips that I like to share with folks. First off, make sure you're paying 100% of your bills on time every month. If you're missing your credit card payments, you're going to be lowering your credit score overall. I always set a little timer, a little reminder on my phone every month on the 14th. It says, ding, make sure you pay off your credit card. And I log on and make sure I pay off that credit card fully and get it down to 0. Keep your low balances on credit cards. You don't want to ever max out your credit card if you can help it. If you're hitting that credit limit, that's a big red flag, and you want to make sure you're either having different types of credit or using debit to pay for things as well. Hitting that maximum limit on your credit card can impact your credit score as well. Don't try to open too many new accounts as well. Most adults, I'd like to say, probably have maybe 2, 3 credit cards that they use maximum. Taking out 5, 6, 7 credit cards is a good way to lose track of things and end up missing payments. Also, once you become an adult, sometimes banks will mail you credit cards and say, hey, this is a pre-approved credit card. You just have to sign up here. Throw those away. If you want a credit card, go to the bank and meet with someone and make sure you're signing a contract that you understand and are talked through it. It's far more risky to get a credit card that's sent to you, and you might not be getting the best interest rate that you could be getting anyways. So if you want to get a credit card, make sure you talk to your bank and are fully understanding what you're doing with that credit card. The other thing you can do is keep your oldest account open for as long as possible. It helps with your credit history to show that you've got a longer history, and that'll improve your credit score as well. And you can also check your credit score with annualcreditscorereport.com if you're unsure about where you're sitting with your credit score. And keep an eye out for any sort of like errors or discrepancies as well. So now I want to take you guys through a little bit of a budgeting activity that I like to do with students. A lot of times with first year students, I will go and we'll make a budget together and see what students' income versus their expenses look like. So if you guys have the budget template open, you guys might want to open that up now and start filling it out as we go along. We can look a little bit at what goes into building a budget? This is a really important skill to have if you are an adult and you're in charge of your own finances. It can start out really simple. Your budgets might be kind of small for now, but the more things you have going on in life with kids and cars and rent, the more it's important to be able to have the skills to build a budget and keep on top of your payments and expenses. So what exactly is a budget? Well, put simply, a budget is just a calculation. It's the income that you earn within a set period of time minus the expenses that you spend during that same period of time. And so the ideal budget is going to either balance out to zero or have extra income that you didn't spend each month. That's the ideal, really, that you can put away money. And so why bother building a budget? Well, we live, where I live in Santa Barbara, the cost of living is very expensive. Not only are students going to be paying for things like tuition, but they're going to have to pay for things like rent if they live in the community, which is very expensive. Food costs a lot more in this area than other areas of the country. In fact, the UC average cost of living is much higher than the national average. As well, for students who are using financial aid to pay for school, generally, students aren't going to have a lot of extra income. The idea behind the financial aid system is that students can apply for financial aid, and the school and the government are going to help you pay for school so that anyone is able to pay for school using some different method. But the federal government and the school are not going to give you extra money to put in your pocket. They're going to give you just the bare minimum that you're going to need to pay for school. So students especially, unless they're getting money from their parents or from another source, don't tend to have a lot of extra available income for things like emergencies. So it's really important to have a budget, to be staying on top of things and understanding what your financial limits are. So there's two different categories for your budget. Income is the first, and this is obviously money that's coming in each month. So it can come from a bunch of different sources. If you're working, you'll have a paycheck coming in. Most paychecks are done either every 2 weeks or every month, depending on where you work. You'll also have financial aid, which generally pays out once per quarter or once per semester. And you can apply for additional scholarships as well through your school. Students can also take out student loans, which would count as income because that's money coming in for the time being, even though you do have to pay that back eventually. For the time being, it would be considered income. Any money that you're getting from family as well, if your family is able to help support you on things, that would be income. And CalFresh as well is a big one. This is the California version of the SNAP program, which is extra money that folks can use if they're approved to pay for groceries. And I think it's over $300 a month now. So it's a pretty significant amount of money that students can get if they are eligible for CalFresh. Highly, highly recommend, if you're going to school, look into CalFresh or look into SNAP programs. The interesting thing about CalFresh is that your eligibility is based off of your household income, and the way that they define household is who you're cooking meals with. So even if you're living in a separate place from your parents, your household is going to be probably either one or two if you end up sharing with roommates. So a lot of students are actually eligible for CalFresh and don't realize it, and it can make a pretty big difference. $300 a month over the course of a year will cut down on a lot of other expenses and help you save extra money for a rainy day. Now, the other side of your budget is going to be your expenses. And you guys will probably notice that in general, there's a lot more expenses than there is income. A lot more things that students or anyone really has to spend money on each month to help pay for their bills. So as a student, your expenses, the big ones are going to be your tuition and your rent. Tuition generally is about 40% of your income. And then rent as well, depending on where you live, can be another huge percent of your income as well. Utilities go along with rent, and food, of course. People need to eat. So unless you've got an outside source for food like CalFresh, you're going to be paying for food as well. Health insurance payments, if you've got co-pays on medications or anything, those can add up quite a bit. Books and supplies, those have to be paid for as well. And then other things that are quality of life things like your phone or car payments if you have a car, toiletries, and even other things that might not seem like necessities, but things like entertainment and clothes and unexpected expenses. When you're building your budget, you want to be honest with yourself. For the most part, I don't think many students are going to never spend money on entertainment. You're going to go to the movies sometimes, you're going to go out with friends, you're going to do other things as well. I would say that it's better to overestimate your budget and overestimate what you're going to do for things like entertainment and clothes. You're not doing yourselves any favors by lying to yourselves on a budget. So this is an example of a budget I filled out with a student a couple years ago. And part of the reason we filled this out was the student wanted to figure out how much they realistically need to take out in student loans every quarter in order to pay for school. And so really quickly, maybe I'll just go through with you guys. And if you haven't already, in the resource folder, there's a copy of the blank budget here. You can click on this and copy paste it, make your own budget, and we can work through it together. But this is the budget that I'm working on here, a blank one for us. The first thing that you guys are going to want to do when building a budget is determine the time period that you're going to look at this for. Now, most adults will make a budget by month because they're getting paid either bi-weekly or bi-monthly. I go to a school, I work at a school where we do a quarter system. And so the quarter system is every 3 months. And so the financial aid pays out on a 3-month period. So when I'm working with students that go to my school, I usually do a 3-month budget because that's the easiest way to budget for things. And so all you're going to do is start filling in these different categories here on what your different income and your expenses are. So let's say you work at a part-time job and you're making $500 and you get paid every 2 weeks. That means that over the course of 3 months, you're going to get paid 6 times and you're going to make $3,000. And so you can go in and do financial aid grants. Let's say maybe you get $200 in grants. That's going to happen. Financial aid at our school pays out once every 3 months. So it'll happen one time and you'll get $200. Scholarships might be the same. Maybe you'll get $1,000. Scholarships, it's going to be one time and you'll end up with $1,000 in that 3-month period. Now, student loans, you might want to skip over this one for a second first and come back to it. It's generally the last one I actually fill in. If you're able to get money from family, let's say you get $300 and they send it to you once a month, then you're going to have $900 overall. And CalFresh, if you're able to apply for CalFresh, you can get $300 a month. There's $900 overall. And at the very bottom here, you can add up all these and figure out what your total budget is. So it's going to be what, 6,000 from the examples I threw in there. And then you're going to want to flip over to the other side here and look at your expenses. So tuition, this is going to be another one-time expense that you pay every 3 months. Let's say it's $5,000, you pay it one time. So the total is going to be $5,000. Rent, which you're going to be living on your own, you're definitely going to be paying rent every month. Rent in our area generally ranges from about $800 a month to $1,200 a month. So to keep it simple, we'll just do $1,000. You're going to be paying that monthly. So over the course of a 3-month period, you're looking at $3,000. So those are pretty big expenses. Those can add up overall. And so you'll want to go down through the rest of these as well. Your utilities, your food, health insurance, phone, car, and then figure out what the total is going to be. And so I'm just going to jump back to the filled out example one here. So when we got to the bottom of the expenses category here, the student realized that they were spending about $10,640 in a 3-month period. So that's per quarter. And so we added up all of their income that they got from their part-time job, their financial aid grants and scholarships. They weren't getting any money from family. Unfortunately, family wasn't able to support, but they were eligible for CalFresh. And at the time, they were getting $194 a month for that. So we added that all up and realized that their income wasn't going to meet their expenses for this quarter. So the student was going to have to take out some student loans. And so we were able to figure out that the minimum amount of student loans they needed to take out was $1,400. And they'd only have to do it one time to cover that. And that's going to make their budget balance. In fact, they technically had extra income of $42, which they could put away. Generally, this was a really, really tight budget, and the student wanted to stay on a really, really tight budget. I probably recommend folks budget a little bit more on the income side of things, just so that they've got money in case of emergencies. But this is, in the end, a budget that does balance. So for yourselves, if you're still in high school, you might not have as many sources of income and you might not have as many expenses. But as you move on to college, you're going to be responsible for more and more of your own expenses, and you'll have hopefully more sources of income as well if you're applying for financial aid. So it's really important to be able to build this budget and look at this, whether you do a monthly budget or a 3-month budget, making sure that you're sticking to your budget and have a plan for going to school. It's a lot less scary if you're able to break it down and look at the numbers as opposed to like one big number. So balancing your budget. What do you do if your income's not meeting your expenses? Well, I guess there's 2 real options here. You can cut your costs. A lot of ways that students will do this is to get a roommate. Most students who go to UC Santa Barbara have a roommate. Very few people live on their own, just because the cost of living is very expensive here. You can buy used things if you want to, buy used clothes, buy things that are cheaper. Reduce the amount of times that you're eating out, or purchase a meal plan, or reduce a meal plan if you've got a meal plan. Meal plans and eating out are more expensive than cooking at home. So if you're finding that you're paying a lot more money on food than you thought every month, reducing the number of times that you're eating out is a good way to cut that down real fast. You can also either walk or bike or use the bus instead of driving. Cars are one of the really big expenses, and most schools, whether you go to school in California, will make you pay for a parking space as well. So not only are you paying for your car and your insurance and the maintenance on that, but if you're wanting to use it to actually go to school, you have to pay for a parking space as well. So a lot of students find that when they come here, it's really not worth the extra expenses to be driving. And a lot of students will use the bus system here instead. We've got a pretty good bus system, and most of the things in Isla Vista are actually walking distance anyway. So a lot of students end up ditching the cars in the first year and using our bus system. The other way that you can help balance your budget is to increase your income. So you can look and apply for additional scholarships. Most of the scholarships that you'll apply for, things that are merit-based, are going to be available during summer. And most of them get posted during summer, and students will apply in summer, and then they'll get awarded out in fall quarter, in September, October time. But extra scholarships are posted throughout the year. So it's important to look back and check and look for additional scholarships online, especially if you've got really good grades. You can also seek out other financial resources around campus. Our campus at UCSB has lots of financial resources for students. We've got a food bank on campus that gives out free food to students, so you can cut out a lot of your grocery shopping if you stop by our campus food bank every month. You can also start a part-time job. A lot of students will work on campus and get an on-campus job. Not only does this give you work experience, which can be helpful after you graduate, but it'll give you income. And most on-campus jobs are pretty flexible since they're going to students. They're going to know that they're working around your school schedule. So you don't want to be missing classes to work at your job to pay for school, which is kind of a vicious circle. So getting a job on campus tends to be better for students because there's more flexibility there. And also borrow and increase your student loans, but only as much as you need to. Don't be taking out more student loans than you need to. Student loans are generally better than credit card debt because you don't have to pay them off until after you graduate, and they've got a lower interest rate after you graduate. But that doesn't mean you should be borrowing money for things that you don't need. And if you have any excess money left over from your job or your income, there might be the inclination to spend that money immediately because you've got it, but it's actually a good idea to put some money aside as well. Put it into a savings account so that you have it for a rainy day. So if you end up in a situation where you accidentally break your arm or something and you've got a medical bill, you've got some sort of safety net to be able to rely on in order to pay that off. So save for emergencies if you can, and make sure you pay off your credit cards as well. If you've got previous debt, even before you come to school, make sure you reduce and pay off those as much as possible. And taking accountability, you guys are all adults, and once you step out into the world of college, you're going to be responsible for your own finances and your own financial aid. So taking accountability for your own expenses is really important. Anytime you spend money on something that wasn't part of your normal budget, make sure you're asking yourself, is this reasonable? Do I really need an industrial ice cream machine in my kitchen? Well, probably not, because I can buy ice cream at the store, and I don't really eat ice cream that often anyways. And also, my kitchen's really small. I don't know where we were going to put it. So don't buy things that you don't actually need. Avoid impulse buying. This is a pretty bad one. I'm pretty bad for this too. I like the sleep on it method. If I'm looking at something and it looks fun and I'm like, I don't know if I actually need this or not, I'll sleep on it for a day and come back. And if I look the next day and decide, sometimes I think, you know what, I don't know what I was thinking. We don't really need that. I've got a personal rule that I don't buy anything after 12 p.m. So if you're up at 2 a.m. and you're scrolling through and you see something, sleep on it. Definitely sleep on it. Don't spend any money between the hours of 12 a.m. and 6 a.m. The other thing you can do is, if you're one of those people who loves impulse buying things and has trouble with your budget, get an accountability buddy. This can be your parents or spouse or sibling or even a friend. Someone who you can, get a second opinion on if you actually need something. Rather than buying that industrial ice cream machine, double check with your spouse and say, hey, do we need this? And we can talk about it, and say, maybe we don't actually need that. Clear way to keep yourself accountable. And what you kind of want to decide whenever you're buying anything, especially if you're using a credit card to buy something, is needs versus wants. So figuring out what are the things that you absolutely need and spending money on those things first. Things like books and groceries, your computers, your rent, those things are needs. Those things are, generally you can't cut back on those, and they're important enough that you really need to be spending money on them every month. You probably will be. Whereas things like wants, concert tickets, eating at restaurants, getting a pet, well, that's a big one. Pets are very expensive, and pet insurance is very expensive. Things like clothes, having a single room as opposed to sharing with a roommate, or cars, another huge expense. These are things that, might be needs, but might be wants. So if they're things that are wants, you'll want to spend money on them after, or not spend money on them at all. And so those are my major tips for covering, debt and how to stay in the green while you go to school. I'll open it up for questions now. People want to throw questions in the chat. I think I saw a few people threw something in there while we were talking. So yeah, let me see. If anyone has any questions, go ahead and throw them in, and I'm happy to answer while I've got time.
Thank you so much, Natalie. Thank you, thank you, thank you. I do see one question, and I'm going to direct this question for you. This question reads, what is a credit mix on the FICO score?
Oh, you know what? I'm not 100% sure. We'll have to look that up and get back to you on that.
Yeah, sweet. No worries. Sweet, sweet, sweet. I will make note of that, and then we can share that at the end when we share the recording as well. Sweet.
Yeah, thanks, Adam.
Of course.
That's a great question.
Yeah, great question. Alrighty. I will just answer that one live. Sweet. Alrighty, folks. If there are no questions, you're more than welcome to head out. But we want to save this time because we have Natalie on with us, and she's more than welcome and more than happy to answer all of your financial aid questions or anything that we just covered as well. So please take this time to drop any questions, whether in the chat or in the Q&A as well. And we'll give it a few more minutes. If we don't receive questions, we will end today's session just a little early. But as I mentioned, folks, we are recording this session, and we'll send that out to everyone else at the end. Alrighty, questions, drop them in. Questions. Oh, I do see a question from Megan in the chat. Natalie, would you like to answer that one?
Sure, let's see. What is the current monthly rent for a 2-bedroom apartment in Santa Barbara? Ooh, okay, are you asking like a 2-bedroom apartment for yourself? That's going to be pretty expensive, and it also depends where you're buying. Downtown Santa Barbara has some of the highest rent. If you're getting a 2-bedroom apartment, it's going to be $2,500 a month to $5,000 a month. If you're looking a little bit further away from downtown Santa Barbara and maybe Goleta, it's still going to be very expensive to have a 2-bedroom apartment to yourself. So that's one of the main reasons that folks will get roommates. Most of the folks in Isla Vista, which is the closest neighborhood to UC Santa Barbara, they live in either doubles or triples, so either 2 people or 3 people to a room. And the average rent then goes much, much lower. It tends to be between 800 to maybe as high as 1,200 in certain areas, but it's much, much more manageable. I'd say it's very rare for students who are going to school at UC Santa Barbara to be even in a 1-bedroom apartment by themselves, because it's quite expensive. A 2-bedroom apartment is going to be very expensive.
Thank you so much. Perfect. So another question just came in, and this one is referring to merit-based scholarships. So this question reads, what is the criteria for merit-based scholarships?
Yeah, good question. So it's going to depend on the scholarship itself, actually. So need-based scholarships are the grants and scholarships that you get when you fill out the FAFSA, the DREAM application. And their only requirements are going to be your family income and your household financial strength. You don't have to apply individually for something like a UCSB scholarship. If you qualify for it, you'll automatically get it. But the merit-based scholarships are additional grants and scholarships that students can apply for. And so there are hundreds of these grants and scholarships that are available at every university. And some of them are university specific. Some of them are available to anyone in the community. They can come from businesses, they can come from families and donors, anyone who makes these scholarships. And so each one's going to have different requirements. The most common ones I'm going to say are academic related. So students are getting over a certain GPA, or students who are studying in a certain field. There might be merit-based scholarships for someone who's studying biology and has a GPA of 3.5 or above. A lot of the merit-based scholarships you do need to apply for individually, so you'll have to fill out an application and send that off. Some of them will even ask for additional requirements, like write an essay or explain like your future work experience goals or your past experience. Academics and sports are another big one as well. If you're a student athlete, you can apply for additional scholarships around athletics. Those are pretty common as well. So there's a whole wide range. It can really be anything that anyone makes a scholarship for. But the major requirements are usually your GPA, anything that you've done like volunteering can be good as well. Writing an essay to explain like your goals, or being in a specific major, studying a specific topic.
Perfect. Thank you. Alrighty. Sweet. So kind of following up to what you shared, Natalie, they're asking for kind of a list of scholarships. So I will actually drop down the scholarship link in the chat. There's a whole webpage, or excuse me, a whole site dedicated on the financial aid website to talk about merit-based scholarships and then Scholarship Universe. Natalie, if you can touch upon a little bit more about what Scholarship Universe is by chance.
Yeah, let me pull it up here for everyone.
Oh, sweet.
So this is the financial aid website for UC Santa Barbara. Now, if you're applying to our school, you'll be able to use this website once you have accepted an offer to attend UCSB. You can't use it before then because you need to log in. But down the side here, there's a tab for scholarships. And it links to this page called Scholarship Universe. Now, Scholarship Universe is the scholarship finding program that UC Santa Barbara uses. Some other universities use it as well, depending on where you're applying. And there's also similar programs as well out there, depending on what university. But this is the one that we use for ours. So what a student does is they log into Scholarship Universe, and it'll ask you financial questions like, what's your GPA? What's your monthly income? Where are you from? And then it will use that information to generate a list of merit-based scholarships for you. So it'll give you a list, say, okay, these are the ones that you're likely eligible for. And then you can click on them and then, apply, fill out the application form and do any of the extra steps. If they want an essay or they want a thank you letter or something, you can do all that through Scholarship Universe. So it makes it really, really easy. Back in my day, I used to just like scroll through websites that had thousands and thousands of scholarships and read every individual one and try and figure out which ones am I eligible for. This makes it a lot easier. It gives you a targeted list. And so the more information you put in, the more accurate that list is going to be. And it'll save you a lot of time. So this is the easiest way to find merit-based scholarships. And most students will fill this out in the summer before they attend school. So if you're going to school this fall, you'd want to fill it out now. If you're going to school next year fall, you'll fill it out next summer.
Thank you so much. Thank you. All righty. Any more questions, folks? If we don't receive a question in the next few minutes, we will conclude today's session. But as a reminder, we will be sending out the recording at the end of this session, if not as early as tomorrow. But thank you so much, Natalie, for all of your great insight. So we're just going to give it just maybe 3 more minutes for questions. If not, then we will conclude today's session. Thank you, folks. Sweet.
Yeah, no problem. If you guys are working on your own budgets and you have questions, or if you guys have questions coming up in the future as well, you can send them to Adam. Adam can pass them on to me. Happy to answer questions for students, even prospective students who haven't applied to UCSB yet.
Absolutely, yes, absolutely. We all work as a collaborative, and we just love supporting students in any way that we can. Thank you, Natalie. Thank you. Alrighty. All right. So at this time, I will stop the recording. And then if we have any more questions, we'll let them filter in. But if not, then